Hey everyone, and welcome back for another deep dive.
Yeah,
We love to really get into the weeds on a
absolutely.
specific topic, and today we're going way back in time.
Way back.
Yeah, to explore this whole world of global economic cycles.
Ooh, I like it.
The paper that we're looking at today is from 2016,
Okay.
and it's called Global Cycles, Capital Flows, Commodities, and Sovereign Defaults, 1815-2015.
Wow. Yeah. So that's a mouthful.
It's a long
A
one.
long title, but a really interesting topic.
Yeah, so I think this is going to be a really fascinating deep dive.
I think so too. What I think is so interesting is that Carmen Reinhardt, Vincent Reinhardt, and Christoph Trebesch,
Yeah.
they really did a deep dive themselves, right? They
Oh.
went and they tried to unearth and really understand
Yeah.
these long-term cycles over, centuries.
Right. And it's just amazing to me that we can get data
Oh, I know.
that goes that far back. How did they do that?
Well, they had to get really creative,
I bet.
especially for the early 1800s.
Okay.
So what they did was they actually looked at a lot of bond issuance records.
Okay.
And most of those were coming from the UK
Makes sense.
because they were really the financial powerhouse
Yeah, they were.
back then. So that gives us a really interesting glimpse into what was happening globally with capital.
Right. So it's sort of UK-centric, but it's a good proxy
Yeah,
for what was happening.
exactly. And they also used data on UK capital exports as well.
Okay.
So really following the money trail.
Right.
But they also wanted to make sure that it wasn't just a UK story.
Right, of course.
So they did this really smart thing where they cross-checked the data with the UK's current account balance.
Oh, okay.
Because that reflects net capital flows.
Right.
So it gives us a broader view
Oh, that's clever.
beyond just what the UK was doing.
Yeah.
And what's fascinating is that even with these different measures
Yeah.
across different periods,
Okay.
the story they tell about capital flows is remarkably consistent.
Okay, so there is a story there.
Oh, yeah.
What is that story?
Well, buckle up because it's a bit of a roller coaster.
Okay.
The data reveals these distinct booms and busts in capital flows,
Okay.
and each cycle typically lasting between 3 and 6 years.
Wow.
Yeah, so imagine like waves crashing on the shore.
Yeah.
That's kind of the rhythm of capital flow for most of history. There was an exception, though, after World War II.
Okay. Yeah, things were a little bit different
A
then.
little bit different.
Yeah.
So in those 3 decades after the war, things were much calmer
Right.
on the capital flow front.
Because everybody was focused on rebuilding and stability.
Exactly. Governments were super focused on rebuilding and stability,
Yeah.
so they implemented all sorts of restrictions, things like capital controls and fixed exchange rates.
Gotcha.
It was really a period of deliberate limitations on that cross-border capital movement.
Yeah.
So it's really interesting because it shows that,
It wasn't always like this.
exactly. And for once, it wasn't completely driven by these wild capital flows
Yeah, okay.
border. But that post-war period really is the exception,
Okay.
not the rule.
Yeah.
For most of history, it's been these boom and bust cycles.
Okay.
And here's where it gets really interesting.
Okay.
These capital flow cycles,
Mm-hmm.
they're often intertwined with another cyclical phenomenon,
Okay.
commodity prices.
Oh, yeah. Commodity prices are always going up and down.
Always.
So how are those related?
Well, that's a great question.
Yeah.
And it's actually what creates this kind of financial thriller.
Okay.
And to really understand the plot twists,
Yeah.
we need to look at what the researchers call a double bust.
Okay.
So that's where things get really interesting. We'll kind of unravel that mystery in the next part of our deep dive.
All right. Looking forward to it. So this double bust you were talking about.
Right.
What exactly happens there?
Okay, so imagine
Yeah.
a country that depends heavily on exporting commodities
Okay.
like oil
Gotcha.
or copper or
Right.
soybeans, whatever it may be.
Yeah.
When prices are high, they're rolling in cash. Foreign investors are pouring money, and it's like a party.
Everyone wants a piece of that.
Exactly. Everybody wants a piece of the action.
Yeah.
But then what happens?
Mm.
Commodity prices crash.
Uh-oh.
And at the same time, those capital inflows dry up.
Oh, that's a big combination.
It's a double whammy.
Yeah, it's like the music stops,
Exactly.
the lights come on.
Yeah, and everyone's like,
Oh, no.
oh, we maybe had a little too much fun.
Whoops.
Yeah, and that's when things can get really messy,
Yeah.
especially for countries that borrowed a lot of money during the good times.
Right. They're over-leveraged.
Exactly.
So those debt payments are going to start to look pretty scary.
Very scary.
Yeah.
Because suddenly they have a lot less money coming in.
Right. Less revenue.
Exactly.
Yeah. So this is the perfect setup for a sovereign default.
That's exactly what the researchers found.
Wow.
And they went deep. They analyzed data all the way back to 1815.
Wow.
And what they found was pretty alarming.
Okay.
Out of 14 identified capital flow booms,
Yeah.
11 were followed by a significant increase in sovereign defaults.
11 out of 14.
11 out of 14, that's a pretty strong link.
Yeah, it's like almost a guarantee.
It's definitely a warning sign.
Okay.
It's not a guaranteed outcome,
Right.
but it's definitely something to watch out for.
Okay.
And to make matters even more interesting,
Yeah.
all 6 major historical spikes in sovereign defaults
Uh-huh.
happened after a capital flow boom ended,
Oh, wow.
often overlapping with those declines in commodity prices.
So it's like a 1-2 punch.
It's that double whammy effect.
Yeah.
Really hitting them hard.
So with all this history in mind, are we headed for a wave of sovereign defaults?
Well, that's the million-dollar question, isn't it?
It is.
And the researchers themselves, they acknowledge there's a lot of uncertainty
Right.
about the future.
Yeah.
But we have seen this double bust play out since 2012.
Right.
Collapsing commodity prices and declining capital flows.
So are things different this time?
Well, it's possible,
Yeah.
maybe emerging markets have gotten smarter.
Okay.
Maybe they implemented better policies.
Right.
Or maybe global financial institutions
Yeah.
have gotten better at managing these types of crises.
Oh, sir.
But it's also possible that we just haven't seen the full impact. Yeah.
This downturn.
Yeah, this downturn.
Right. Because it has been going on for a while. It's
Been a while.
So maybe there's a delayed reaction.
Yeah, maybe we're just waiting for the other shoe to drop.
All right. So in the paper, they use a chart figure 1
Yes.
to kind of show these capital flow cycles.
Yes.
What does that look like?
Well, it's fascinating. You see these distinct peaks and valleys,
Okay.
almost like waves crashing on the shore.
Right. Like we were talking about.
Exactly. And what's really striking is the upward trend you see during the gold standard era.
Oh, interesting.
It was a period of, incredible globalization
Right.
and financial integration.
Yeah.
But even within that upward trend, you can still see those cyclical fluctuations.
So it's like a wave that's getting bigger over time.
Exactly.
But still crashing.
Still crashing.
Oh, that's fascinating.
Yeah, so it really underscores the point that these booms and busts, they're a recurring feature
Yeah.
of the global financial system.
Okay, so we see this pattern repeating
Yeah.
throughout history. But now let's look at what's happening right now.
Okay.
We've had this double bust since 2012.
Uh-huh.
Does that mean we're headed for a wave of sovereign defaults?
That's the big question.
Yeah,
And unfortunately, the researchers don't have a crystal ball,
right.
but they do offer some really insightful data
Okay.
in Table 3 that compares the recent cycle to those historical averages.
Okay.
So, for example, the recent commodity price boom
Okay.
lasted a whopping 12 years,
12 years.
from 1999 to 2011.
Wow, that's a long time.
It's double the average length
Wow.
of commodity booms since the late 18th century.
What do you think was driving that?
Well, it's hard to say for sure.
Right.
It could be a bunch of factors.
Like what?
Well, rapid growth in emerging markets.
Yeah.
China's huge demand for commodities.
Okay.
Maybe even loose monetary policy in developed countries.
Right.
It's a complex puzzle.
Yeah.
But understanding those factors could really help us understand why it eventually went bust.
Right. Okay, so the boom was longer, but then what about the bust?
Well, that's interesting too.
Okay.
Because while the boom was longer than usual,
Yeah.
the bust itself seems to be following a more typical pattern.
Okay, so how long was it?
So it lasted about 4 years,
Okay.
from 2011 to 2015,
Yeah.
with a 25.1% decline in prices.
Okay. And historically,
Historically, the average bust is about 6 years,
okay.
with a 25.8% decline.
So a little bit shorter.
A little bit shorter, a little less severe.
Okay.
But here's the thing.
What's that?
We're still in uncharted territory.
Okay.
Because this overall downturn,
Yeah.
with both declining capital flows and falling commodity prices.
Right, that double bust.
Exactly.
Yeah.
It's been unusually protracted.
It's been dragging on.
It's been dragging on.
Yeah, so it's like we're watching this financial thriller in slow
It
motion.
really is.
The question is, how does it end?
That's the question.
Yeah.
And that's what makes this research so captivating.
Okay.
It highlights this really intricate dance
Yeah.
between capital flows, commodity prices, and sovereign debt.
And we can't forget history.
Right. And it reminds us that history can offer some valuable lessons,
Yeah.
even in a world that's constantly changing.
So is it different this time, or is history going to repeat itself?
Well, the honest answer is we don't know for sure,
Of course.
but by understanding these patterns
Yeah.
and analyzing the current situation through that lens,
Yeah.
we can start to ask better questions
Okay.
and maybe anticipate potential risks and opportunities.
It's like we've got a roadmap
It is like a roadmap.
for the global economy.
Exactly.
We might not be able to predict every storm,
Right.
but at least we know where the reefs are.
That's a great way to put it.
Okay, so we see how this all plays out historically.
Yeah.
What does it mean for us today?
That's the key question, right?
Yeah, what does it all mean for, like, the average person out there?
I think the biggest takeaway is awareness.
Okay.
Like understanding that these global cycles exist,
Yeah.
that capital flows have like a rhythm,
Right.
and that commodity prices are all part of this big,
Yeah.
intricate dance.
Yeah, it's a lot of moving parts,
It
and
is.
they're all interconnected.
Exactly. It's like having a backstage pass to the
Ooh,
global economic
I
theater.
like that.
You get to see how it all works
Yeah.
behind the scenes.
So instead of being surprised by these shifts,
Right.
we can maybe anticipate them a little bit better?
Exactly. Or at least understand why they're happening.
Yeah.
It's like knowing the tide is coming in.
Okay.
You don't fight it, you prepare for it.
Right.
So that preparation can take different forms.
Like what?
It can influence your investments,
Okay.
maybe the career choices you make,
Right.
or even how you interpret the news.
Okay.
It's really about connecting the dots.
Yeah, between the big picture and
Right.
your own personal world.
Yeah,
So sovereign defaults are kind of like that canary in the coal mine.
they are.
What are some other red flags?
Well, keep an eye on global debt levels,
Okay.
especially in emerging markets.
All right.
If those start rising rapidly, that could be a problem.
Okay.
Also, sudden reversals in capital flows.
So like investors pulling money out quickly.
Yeah, if you see that happening, that's another red flag.
Oh, okay.
And of course, commodity prices,
Yeah.
especially for countries that really depend on those exports.
Right.
If those prices start to tank,
Uh-oh.
that could be a sign of trouble.
So it's all about watching the global economic weather.
Exactly.
Yeah.
And looking for those little localized storms.
Yeah, don't underestimate diversification either.
Oh, that's so important.
Right.
Don't put all your eggs in one basket.
Spread the risk.
Exactly. Spread the risk.
Well, this has been an incredible deep dive.
It has.
I feel like we've gone from dusty archives
Yeah.
to, potential future crises,
Yeah,
but I feel like I understand it so much better now.
I'm glad to hear that.
Any final words of wisdom?
Don't be afraid to question assumptions.
Okay.
Just because something happened a certain way in the past
Right.
doesn't mean it'll happen again.
The world is always changing.
Exactly.
Yeah.
So stay curious, stay informed,
Okay.
and keep asking those tough questions.
That's great advice.
Thank you.
Well, thank you so much for this.
It's been a pleasure.
Yeah, it's been so insightful.
I always enjoy a good deep dive into economic history.
Me too. All right. And to our listener out there,
Yes.
thanks for joining us
Absolutely.
on this journey through time and global finance.
It's been a wild ride,
Yeah, it has.
but hopefully a valuable one.
I hope so.
I think so.
And until next time, stay curious and keep exploring.
Absolutely.